Active. Good morning, everybody. Welcome to Business Administration 3 on this Thursday morning, the 25th of July. So today we continue where we left off in our previous session, and considering that you are behind the other group, we need to speed things up slightly. I've took the liberty of checking your numbers as you shared it. And so let's quickly just get to that and then not have that long discussion on this as I had on Tuesday, but just to emphasize our situation this morning comparing South African Rand to the other currencies. And so when we do that, we see that our currency has there was some movement between Tuesday and today. So Tuesday would be indicated in red, today is in black. And so the first obvious question, Rand pound compared to where we were on Tuesday, is the Rand today stronger or is it weaker? In the comment section, just a S or a W. Don't have to type out the whole thing. If you type fast, that's great. You can do it. But I just need to get a sense of where you are with this. Is Rand this morning stronger or is it weaker than what it was on Tuesday? Let's see. We see W all the way so far. Great. Okay. So I then accept that you understand the principle involved here, right? So as we pay more for our currency over to exchange for another currency, in this case the pound, the Rand has definitely lost some value since Tuesday. What about the euro? Same scenario, right? The numbers tell you that's exactly what's going on there. Then you have the dollar, and as the dollar is, like I keep on saying, is the most significant of the three, it clearly shows signs of deterioration. We've lost just about 6 cents from Tuesday up to this minute when we check the spot price today. So far, the currencies are not looking good. It is not a good picture. So you can see the market forces at play, the demand and the supply. And again, I try to be careful in how I'm explaining this, but today we can elaborate slightly more. When you look at these numbers, I actually already referred to it, I alluded to it. I said that these currencies changed not just because more people invest in our currency directly. So, in other words, it's not just local economic factors. It's also local political factors, right? But the local influence, whether it's political or economic, the local influence is there. There's no question about it. But generally what we find with currencies is that the main driver for currency value changes, in our case now it's losing value, tends to come from outside, international economic reasons, international political reasons. So what you see is a function of both local reasons, economic, political, and or economic and political international reasons. So one must not make the mistake of being too narrow in your analysis. And therefore, if we quickly just look at that in terms of between Tuesday and this morning, essentially we have a day and just more than a day and a half in between our last check and this morning. in real time. What happened locally, economically speaking, that could have weakened our currency? In the economy currently, if you look at all the indicators, if you look at what is going on around us, there's still no real actual load shedding happening. So load shedding is not a factor at this minute. Yes, there's some legislation that the president signed from a political standpoint. But again, the impact of that is not severe enough to be a causal factor, a factor causing the loss of some value. The fact that our interest rates remained unchanged was supposedly done last week when the governor of the Reserve Bank decided to keep the interest rates unchanged. It was supposed to be, the main reason was so that we don't precisely lose value in our currency, also by reducing interest rates. You know how that works now, right? So if our interest rates are high, I explained this in a previous session, if our interest rates are kept at the levels where they're at, it is very enticing. It is very tempting for international investors with lots of cash to hand to bring that cash here, invest it in our market where the interest rates are fairly high compared to most other countries. And so you get a nice return on your investment. So part of the Reserve Bank's argument was that they're not going to reduce interest rates yet because the Americans haven't reduced their interest rates. So it's a waiting game, and we sitting here watching what the Americans are doing, and we want to follow them. Why do we follow them? Because if we lower our interest rates, there's a threat, a possibility that investors will then, if we lower our interest rates, there's less interest for them to get from the investment. They take their money and go to the dollar investments, which is the most traded, not one of the most, the dollar is the most traded currency in the world. So they will take it there, and because those interest rates in America did not change, did not come down yet. So we're playing a waiting game. I explained on Tuesday that we are a tiny, tiny, tiny little economy in the big world of economics. So we are sometimes overcautious. But there's other explanations for it, which I don't really want to go into too much detail, but except to say that being cautious is not necessarily a bad thing. The alternative to being cautious is what we saw in our neighboring country, where they experienced hyperinflation. Hyperinflation is a terrible, terrible, it's a disease of the economy and the politics, because what happens with hyperinflation is that your money, it becomes worthless. The inflation rate is so high that it deteriorates the value that you have of your currency, unless there's value in your economy to counter that, to balance it out. Now, in Zimbabwe, that wasn't the case. So they started printing larger and larger denominations of currencies, like notes, bank notes. They started off like most countries would have, like $1 Zim dollar, 2 Zim dollar, 5 Zim dollar, and so it went on. The thing is that the Zim dollars were fine for a little while, and then the policies changed from the government. When those policies started changing in a very real way, the international markets reacted, and the value of the Zimbabwean currency was just simply destroyed directly as a consequence of hyperinflation, and to the extent that they were printing larger and larger and larger denominations of currency notes to try and keep up with their inflation rates, to the point that they were doing this for up to like a trillion Zim dollars in one note. So you needed a whole wheelbarrow full of notes to go to the shop to buy a loaf of bread and some milk. That's hyperinflation. That's when you keep on spending and printing more money, and you don't balance your expense and your income and your value in your economy and your currencies. So when you keep on borrowing, you keep on spending, and you're not generating economic value in your economy, GDP, GNP, that's where hyperinflation is going to just take off. Now, South Africa's Reserve Bank is overly cautious. I'm explaining this now so that I'm not coming back to this. The South African Reserve Bank has the responsibility to set interest rates, to set the repo rate, and to set in other words, the cost of borrowed money. They determine that, and they use that as they call it an instrument, a way, a method to try and limit people's borrowing, so that if they increase the interest rates, people will borrow less because it's more expensive to borrow. The Zimbabwean experience was that they didn't bother with that. They just printed money when they needed more money, and we can print money also. The Americans have been printing money for many years, but the thing is, they're the most traded currency, and so everybody's using dollars for whatever. So they just print more dollars to pay their debts. Now it's starting to catch up with them. The economy is in serious trouble. But if you look at the numbers on screen, it seems as if the dollar is strong. It is not strong because of their domestic economic value. It is sort of artificially kept strong because the whole world is still trading in dollars, especially when you want to buy oil. You have to trade whatever your currency is into dollar to get oil. So the Reserve Bank of South Africa is trying to avoid that scenario by being very careful about interest rate adjustments. So they want to keep interest rates fairly high so that people are discouraged from borrowing more. Not that it actually works. It's like saying we're going to increase the price of cigarettes. Yes, increase the price of cigarettes. Those who smoke will not stop smoking because the price of cigarettes have gone up. They'll just make another plan. That's just the way it works. Now, so people who need money will make a plan to borrow money somewhere, either legitimately or unlawfully so, but they'll make a plan. So the interest rates is used as an instrument in South Africa to try and stabilize our inflation rate. And it is, and this is what you must know, you must write this down. It is well recorded that the range of interest rate within which we want to keep, or the Reserve Bank wants to keep our interest rates are between 3 and 6%. So the Reserve Bank is trying to maintain South Africa's interest rates in that band of 3 to 6% range for the inflation sake. So the inflation target is 3 to 6%. They use the interest rates to try and reduce our demand for borrowing, so that we can get our inflation rate between 3 and 6%. Unlike in other countries, it's not just Zimbabwe hyperinflation. There's many countries, Venezuela, Italy. It was happening all over the world, right? So hyperinflation is when your inflation rate goes from 10% to 100% to 500% to 1,000% to 10,000% to 100,000%. And it sounds like I'm making up these numbers, but if you want to see a disaster, a horror movie, then you must look at hyperinflation rates. Your inflation rate goes into the million percentage points. So if something costs 100 Rand today at just at 1,000 percentage rates inflation, by tomorrow that same thing will cost you about 2,000 Rand. You can't keep up with it. So Zimbabwe had to change their currency values so much over time. There had been so many different versions of the Zimbabwean dollar. So they print, why? Because they kept on printing larger notes. Like I said, the maximum was 1,000. At some point early, it was 1,000 Zim dollars. That was big. And then when the inflation started increasing, they had to print larger and larger and larger. And then they realized, but that this is not going to work. So they reverted to stop the Zim dollar, and they started using US dollar. I'm talking about Zimbabwe not to point fingers. I'm talking about Zimbabwe because this is a case study. Many people conveniently want to ignore it because if it's not happening, and we want to try the same things that they tried and see if we can get a different outcome. I'm alerting you to this so that you understand there's a clear case study that will show you if you don't have a handle, if you don't control your inflation rate, your economy will spiral out of control. So Zimbabwe went from being the breadbasket of Africa and in many cases the world. What does that mean? A breadbasket means they were providing food for a lot of African countries, including even South Africa in some respects, and they were exporting a lot of it. Tobacco, wheat, maize. They have some of the best agricultural quality land to plant and to raise crops, but that just fell away, and they started now being dependent on import. So they're importing wheat and maize, especially maize from South Africa, wheat from Russia and Ukraine. And so it's a tragedy that's what's happening there. So if you're still considering why there are so many people from Zimbabwe and South Africa, it is a direct consequence of a few factors, but one of them is hyperinflation. It is just, you can't live. You can't sustain yourself under those conditions. Your salary must go up more or less at the equal rate that the inflation is going up, and no business can survive that. So the government started intervening in an artificial manner in the economy, and they basically just made things worse. So in South Africa, the learnings, more than one thing we learned from that, is that our Reserve Bank is very cautious. So we should actually already have lower interest rates in South Africa at this minute, but it's not happening. So back to the screen, these numbers tell you that we've lost value. The value loss is not really about South Africa's decisions, okay? Abungile, if and everyone else, if you're in session and you've experienced difficulties with communication, you can't hear you, or the video is sort of not very stable. Sometimes just try log out and log back in again. Most of the time that will fix it, but if you have, as you are pointing out, technical difficulties, then it may be a bit more challenging. The recording nonetheless will be there so that you can revisit, but try and stay with me so that you can follow in real time. Do not do what your colleagues are doing who are absent now and acting like they're going to depend on the recordings to get them through this. Very few students can manage to pass this subject by listening to the recordings only. I'm just telling you that. So for noting. Back to this. So it's the reasons for currency devaluation from the rand perspective cannot really be attributed to local reasons, economic or political. If you look what happened in the world since Tuesday, well, we had the news of the President Biden not continuing to offer him his candidacy for the American presidential elections. So he stepped back. That caused the rest of the world to sort of wonder what's going to happen now. That causes some uncertainty. And so that was a factor. It's a huge factor, actually, because everybody's still looking at the Americans for some kind of indication what's going to happen with their economies, especially in the developing nations. Like South Africa is a developing country, not a developed country like Europe purports to be a developed continent. America wants to call itself a developed economy. Canada developed, UK developed, regarded as a developed. Right. I'm not sure if you can see this on your side, but there's a break in connection from Blackboard servers. So when you hear me disappear on you in the middle of a sentence without any warning, if you hear me and then suddenly I'm not audible, that's not because I'm ignoring you or I've just walked away. It's because there's a break in the transmission from the Blackboard servers. There's some instability on the connectivity side, but we should be back now. Okay, so just want to conclude that point. When we look at the offshore, the international experience, there's a whole lot of things going on there. And mostly it's driven by, as I said, America and Chinese. Those are the two main role players because they're the two most powerful economies. And so when there's any uncertainty in the world, the investors are not rushing to buy currencies from developing nations like ours. They go to something solid, like either invest in gold or invest in the dollar. Or if not gold, then they go to the oil price kind of thing. So what is clearly happening here is that there's still a lot of interest that in the price. There's a whole lot of things at play there. And the markets, as I explained, the market, demand and supply, are very, very fickle is the American word, or the English word, F-I-C-K-L-E, fickle. That simply means that you don't know how they're going to operate, and the 1 minute they're up, the next minute they're down. It's driven by individual understanding of what's going on around them, their understanding. And the fact is that no, people don't always really understand what's going on in another country. They hear reports, but they don't live there, so they don't see and understand for real what's going on. So the market is driven by what we call sentiment. Sentiment is just that feeling that you have towards someone or something. And so the rand is not doing great now, losing value since last week. Now, you've not really been there last week. If you look at last week's, the 18th, a week ago, if you look at that currency numbers, you can see that it's quite a significant jump. It's almost 31 cents that we've lost since last week. That's a lot of value, right? But, and here's a little bit of good news, if we can find it. On the right-hand side of screen, Brent crude. Brent crude last week was $85. The pound, the dollar was down, and the oil price was up. Remember, we buy and sell oil in dollars. These two are connected. These two indicators are directly connected. But what you will see is, if you look at the screen, you will see that there is a trend. There's a tendency that if the one goes up, the other one goes down. So, for example, the Brent crude price last week was 85. The dollar was 18.18. The next check was the oil price came down from 85 to 82. Look what happened to the dollar. The dollar went up. Look at today's number from Tuesday. Oil price came down, dollar went up. It's the classic, what they call the seesaw effect. You know that on the playground when you sit on that plank on the one side and someone else sits on the other side, and you bounce up and down. And if you're of equal weight, you can actually just sort of stabilize and hang in the middle. But the idea is to go up and down. As the one side goes up, the other side goes down. That's the seesaw effect. And you will find that most of the time that this will be the case. If the dollar goes up, oil price comes down, and vice versa. But sometimes, not today, but sometimes, you find that both the dollar and the oil price either goes up in value or it comes down in value. Now, that leads us precisely to where I want to go, and that is the oil price, or the oil situation. So I've asked that you for today find out the top 5 oil producing countries in the world. Please share your list in the comment section for us. Let me see what you could figure out. Who are the top oil producing countries in all of the world? And then Africa, so type that while I'm speaking. Africa has a lot of oil as well, but the question is where do we find most of Africa's oil? Which two countries seem to dominate the oil market in that respect? All right, so let's just start with that very quickly. So who would be your top 5 oil producing countries? Internationally. Who's number 1 on your list? Who would have most oil in all of the world today, according to your list? Number 1 oil producer. Phew, some of you type faster. US, Saudi, Mr. Mafignana, US. It's an interesting one, because if we had this conversation about, what, 10, 15 years ago, the US would not have been the number 1 on the list. It would have been very clearly Saudi Arabia. But this is a sign of the times. This is how we see things developing and changing. So if you look at the comment section, brilliant contributions, thank you. If you look at that comment section, you can see how different your lists are. Actually, some of your lists are pretty similar. Some are exactly the same. I don't know how much collaboration were happening there, but some of your lists are completely different. I didn't say wrong, I say different. And that again is a function of where you've checked, right? Which source did you use in order to extract this information? So if we look at your lists, there seems to be a majority trend towards US being number 1 on the list. And that may very well be true. The critical reality of this is we don't know. So where you got your list from, whatever that site is, they got that data again from someone who told them. Because it's an impossible task to go around in any country and to try and measure how much oil is still under the ground, or on the seabed. Go into the seabed and see what oil reserves are present. So these are guesstimations, where they guess based on certain calculations that they make, and it's a sort of a prediction of what they think it is. But because America has a lot of oil, no question, and they export very little of their oil, they tend to use a lot of it for own consumption and export only some of it. They tend to have a huge reserve, whereas Saudi Arabia only produce for export. The little bit they use in their country is so small amount, it's not even worth mentioning compared to the vast bulk of the oil that they send off to the rest of the world. Now, what I want you to pay attention to is, if I just quickly go back to that start of that list, US, okay, Mr. Mafinyana, you're going to have others on there as well. So US um, and Ms. Machisi, US, Saudi, Russia, Canada, China. China. I see China on again on many of your lists, but not on all of your lists. And that's also interesting. Now, the reason why I asked you to go and look at the top 5 oil producing countries was not for just an interesting insight into that world, but is to make you aware that those countries, the names of those countries that you have shared with us, if you look at them, they tend to be in the news headlines all the time. From a geopolitical standpoint, in other words, international politics are basically dominated by those players. US, Russia, China, Saudi Arabia to an extent, but that only really when it comes to oil. But the 3 most prominent players in the world today, US, Russia, and China. Canada is not really, they're prominent because they do have a lot of oil, but Venezuela should, in all honesty, should be on there. Venezuela and Iran. Abu Ghile has nailed it with Iraq, Iran, Kuwait, Canada, US. Again, people, it's a very subjective list. It depends on who you speak to, what source you rely on. So it's not a definitive answer that you just shared with us. But I want you to see, make the connection, see the names on that list, and then you'll start to understand a little bit better why the international economic scene is kind of dominated by these countries, because there are serious operators in the oil space. And as much as we have renewable energy like solar power, and wind power and all of those things to get to electrical vehicles and to move away from so-called fossil fuels, it is not happening anytime soon. Fossil fuels will be around for a long, long time, and that includes oil. So they are in a tremendously strong position from an economic standpoint, but also from a political standpoint. Okay, so remember those names: USA, Russia, and China. Not that the other countries are unimportant, it's just those are the 3 power players in the world as we know it today. What about Africa? Who are the 2 most prominent African producers of oil in the world today? What is your take on that? The 2 most highest producing countries of oil in Africa, the continent of Africa. Libya, Angola. Very interesting list that you have. Are you sitting next to Unati? Nigeria, Angola. Yeah, now we're shifting away from Libya. Interesting. Very interesting. Now, part of the question here is, again, almost the same as with the US. Who is the biggest economy currently in the world? On paper, it's supposed to be the US, right? And guess who has the most oil? Now, that could be a coincidence, but not really if you consider that oil trade is happening per dollar, not per other currency. So until that changes, you are likely to see the American economy being very strong. However, the Chinese are definitely, in my view, I think the Chinese are ahead of the Americans at this stage, economically speaking. But I'm just showing you that there's a connection. So in Africa, who is the strongest economy in Africa? Strongest economy in Africa. What country has the #1 economy in all of Africa? Take a guess. You shouldn't be guessing, you should know this, but nonetheless. So when you think of your list that you shared with us now in terms of African oil producers, then the answer is on there somewhere. So South Africa used to be the #1 economy on the continent for decades. And that was as a function of our very active mining industry. That our mining output, our mining production dominated. There was no country in Africa that could come close. But as our gold reserves started to dwindle, as we are selling less, fewer diamonds, and we are also not, our mining sector is actually not as active as it used to be. Not always because we've run out of whatever the mineral or the metal is, but because of legislation, politicians, a lot of fraud going on, corruption, red tape. We make it impossible. The politicians make it impossible for this economy to reach its potential when they do the things that they like doing, that is getting involved in aspects of the economy that they shouldn't be. And the only reason they're getting involved is because there's money to be made. Now, long explanation, but the bottom line is Nigeria is the #1 oil producer on the continent of Africa. It also happens to be the #1 economy in Africa, incidentally. If you had Angola as #2, that would be correct. Although those of you that had Libya as the #1 in Africa, not entirely incorrect. It used to be that Libya had more oil than even Nigeria. The difference came when the ruler of Libya, the president of Libya, Gaddafi. Mr. Gaddafi was a visionary man. He with the riches that they gathered from their oil, the Libyans were living in a completely different world. They didn't pay taxes. They had jobs were fairly easy to come by. You were given money if you got married by the state. If you wanted to farm, they will give you land and they will pay for equipment. You didn't pay for studies. You didn't go pay for when going to hospitals or clinics or anything like that. It was, and then the Americans had him assassinated. Why did they remove him? Because he wanted to create a unified Africa, like Europe, with different countries, but called Europe. He wanted Africa to do the same thing. And this was the problem, he said, we're no longer going to trade relying on the dollar. We're going to create an African currency, a common African currency that we will use to trade. And the Americans didn't like that. But you can read the whole history. Don't listen to me in my detail. You can go and find this out for yourselves. So why am I talking about him? Because when they removed him, Libya was was just, and it still is, a place of chaos compared to where it was. Peace, prosperity, stability, growth. Now it is terrible. There's all sorts of groups of uh, political and other groupings that want to seize control of the country and the oil that's available there, and it's just everything is destabilized. So now, on paper, the Libyans are not featuring in the top three because of political instability, infighting. But if everything was back to the time when President Gaddafi was there, I would definitely, that list would look differently than what it does today. So they would feature in the top two between them and Nigeria. Only thing is Nigeria has expanded its production because it managed to attract a lot more foreigners who want to invest in their oil platform. So they don't do it themselves. They get Shell and BP and Texaco, which is Caltex, which we used to have Caltex, which is no longer here, and companies like that to come in and exploit the oil market. So yes, they are the number one. Angola would actually overtake Nigeria if they can just sort out their issues with the remnants of the civil war that they went through. They can also increase it. Now, that's all good and interesting. So we know the top five oil producers in the world. We know the top two oil producers in Africa. My third question around oil is, we find South African oil. Okay. Someone please enlighten is our own oil production, and where do we get most of our oil from? What place? What town? In which province? And I am talking about your own country now. I'm not talking about some far distant country away from us. So we have Mossel Bay, Outeniqua Basin. Mr. Mafinyana is on the Google today. I like it, but my question was, where in South Africa do we find our own oil? Those addresses that you're sharing now, Mossel Bay, yeah, that is where they found natural gas reserves. So off the coast of Mossel Bay, about that 175 kilometers to the southeast of Mossel Bay, you would find some gas deposits in the seabed. That's why, if you know anything about a town called Mossel Bay, there's a plant that was erected there, a processing plant called Mossgas, Mossgas, Mossgas. And it was created precisely because they found gas when they were drilling looking for oil. Now, generally speaking, what you must know is where you find natural gas, you tend to find oil. Where you find oil, you tend to find natural gas. The two are generally, and I'd say generally, found very close to each other. Not so the case in South Africa's situation. So they found this natural gas deposits, and they were extracting that for 3-4 decades now. The problem is that the gas is running out. there's not a lot left, and there's talks now of shutting down that plant because it's no longer viable to continue operating it. So my question is still, where is the oil? So far, you've been only highlighting the gas situation. They are drilling, Mr. Mafinyana, you're not entirely incorrect. They keep on drilling test holes off the coast, Plettenberg Bay up the coast, but a bit further in. And they being not South Africans again, it is the international oil exploration companies that are doing that. Some of the big names, Total from France, Shell from the Netherlands, the Dutch company called Shell, and so on. They drill holes to see if they can find it. They've got the prospecting rights. Now, here's the biggest reveal so far this week when it comes to South Africa, ladies and gentlemen. You need to appreciate and understand what is going on in your own country. You are the leaders of tomorrow. You cannot act ignorant or pretend that you know you don't know. You must know, because there's going to be generations following you that's going to look up to you for guidance. You cannot, this is not someone else's issue. This is yours. Okay, Unati, the Saldanha Bay situation, I don't know if there's anyone from the West Coast present in our session, but if you've ever been up that way to Saldanha Bay, to the right as you drive towards Saldanha, just past Langebaan, in the veld, there, so you can see it from the road almost at certain points. There's a massive underground bunker structure. It's a huge oil tank. If I say huge, it's like probably 20 soccer fields, 10 or 20, between, yeah, let's say 15 and 20 soccer fields, the size of it. And it's big storage facility where crude oil that we import, note, import from other countries, Iran, Saudi Arabia, Venezuela sometimes, but not for a while. Some of it comes from Nigeria. That's where the oil that we import from the rest of the world who are producing oil, we store it in that particular facility. It was built back even in apartheid days to store oil. Because why? South Africa do not have its own oil. We don't have a drop of our own actual oil. So if nothing sort of makes sense so far, this, what I'm telling you now, should be a game changer. We are in serious trouble in South Africa. Imagine every truck, every taxi, every bus, every car, every plane, every boat that is switched on and is driving somewhere or flying somewhere, right? Every minute of every day needs petrol and or diesel. Petrol and diesel comes from oil. The oil that we don't have, we must import it. Look at the screen, look at the Rand dollar exchange rate, and now you'll get a sense of Brent crude. One barrel is 81 today, spot price for today is $81.84 for one barrel. How many barrels do you think do we import on a daily, weekly, monthly basis? We don't import like 10 barrels and 20 barrels. The barrel sizes are not standard size. If you think about, if you hear the word a barrel, you'll think about a 200-liter drum that we would have That's smaller than a 200-liter barrel that we know a barrel to be. And so it costs about $82 for one barrel, and we're importing hundreds and thousands of barrels per week. Some months we go into very close to 600, 700,000 barrels, depending on the season, etc., etc. Now do the math times the number of barrels against the rand dollar exchange rate. That's how much money we have to pay to get oil into this country that we can then refine. If you know Table View, if you go towards Table View, there's the refinery there that used to be Caltex, which is now Astron owned, but it's the refinery. There's only two refineries in South Africa. One here in the Western Cape, here by Table View, and the other one is in Durban. And they're not both fully operational. So now we're not only importing oil, we're also importing already refined petrol and diesel. That's even more expensive. Our economy is one that is completely dependent on other nations to supply us with this source of energy that will allow us to transport goods, services, and people. Every item on the shelf that you see, doesn't matter where you go, if it's a shop, a restaurant, a factory, every item that you see, whether it's material, a finished article, doesn't matter, needs to be transported, mainly by road. We're trying to get the railway system up and running, but then you have diesel locomotives, and they are diesel and electrical locomotives. You cannot escape this. We are completely dependent on petrol and diesel to keep the economy running, transporting goods, services, and people, as I said. And we don't have oil. Now you probably have to understand, or will be able to rather understand a little bit better, why South Africa is so nice to the rest of the world. We don't fight with many people or many countries because we can't really afford to. We are completely dependent. And that dependency is a terrible situation to be in, right? That dependency causes us to be what is generally termed as, look in the comment section, price takers. South Africa is regarded as a price taker when it comes to oil price. What does that mean? Well, it's the same principle as when you go to a retail store. Let's say you go to ShopRite and you buy an article, and that article is marked at 23 rands 99. You go to the till, you set that article down and you say, yeah, and they scan it, it says 23.99, and you take out of your pocket 20 rand note because that's the only money that you have, and you offer that to the teller, you offer that to the person at the till. Would they accept your 20 rands at ShopRite? If you go in there, that thing is 23.99, and you offer them 20 rands. Would they say, yeah, sure, fine, give me your 20, you can take it? What is your experience? The price on the shelf is the price that you have to pay. When you get to the pay point, if you don't have enough money to pay for that article at the price point, then you can't, they will not sell it to you. You can't take it at that price. You pay what they want you to pay. Now that's what price takers mean. So you checking these Brent crude spot prices is telling you that if we order oil, if you buy oil now, generally speaking, that's what you'll be paying. But remember, it gets adjusted every 15 to 20 minutes. So it's a luck of the draw. Sometimes you're lucky, you can get the oil price to go down, and you can buy it a little bit at a lower price. But what did I say earlier? As the oil price comes down, the dollar price goes up. The seesaw effect. So are we really gaining anything here in South Africa? So if we win if you just look at the numbers on screen for today, we win on the oil price going down, but the dollar price has gone up. Remember, you still have to pay for even if the price is lower, the oil price in dollars. So it's a huge, massive expense to our economy. We have been looking for oil for decades, everywhere, on land, on the seabed, in drilling everywhere, and we just seem to find some gas deposits. Namibia, our neighbor, has struck huge oil reserves off the coast of Walvis Bay, which is a few hundred kilometers north of our border with Namibia. We are, we're neighbors, direct neighbors, but they didn't find it on land. They found it on the seabed, drilling into the seabed. So now there's a big interest by these international oil companies that I've mentioned the names of, Shell and BP and so, to go up to the west coast and drill in South Africa's waters, more or less in line with where they found the Namibian oil. Once that Namibian oil comes online, because it takes years to set up the production platform that can extract the oil, that can transport it to land, and then it gets either processed or it gets exported. But once the Namibian oil is flowing, that country is going to just be something else. Based on all estimations, I don't know for sure how much oil it is, but apparently it seems as if it is a massive amount of oil that they found there. So South Africa, we have many of all sorts of minerals and metals available, but that's the one thing that has eluded us, that we do not have, and that is oil. And it's regarded as a strategic resource. It's not just a resource, it's a strategic resource. What does that mean? It means that we can't function without it. So we are price takers. We have to pay what the market demands from us. And so we are in a very, very vulnerable position as a consequence of that. Learn about your own country, please. Mossel Bay is about gas. They were hoping to find oil, but they only found gas. The gas reserves are running out. So they are, Total at this point has drilled another couple of holes in the seabed. But just to give you a sense, it cost about $1 billion to have the oil drilling platform move from wherever they may have been, usually from Europe or from the Middle East, to pull it all the way down here to where we want to set it up, do the geological surveys to see where will it be stable enough to have that platform put in position, and then to do the drilling takes weeks and months. So the cost associated with drilling just one hole is unbelievable. We can't, as an economy in South Africa, we can't afford to actually do that at this present time. So we allow these foreign companies to come in and do it on our behalf. But here's the last thing I want to mention about that. If, let's say, tomorrow Total or Shell strike oil, the contracts, apparently, I am told, is set up such that if they find oil, the company who drilled for that oil and who found that oil, they get the rights to that oil to the extent of about 90%, 85 to 90%. South Africa will only get about 10% of the value of the oil that is going to be extracted. Can you understand how ridiculous this is? Here, I'm telling you that we don't have our own oil. We are completely dependent on international oil being imported to South Africa at massive expense, dollar times the cost of a barrel of oil. And we don't use any oil, we use only Brent crude. That's why you're checking Brent crude oil. So it's tremendously expensive. Now, if we do find oil, we're only going to get the benefit of 10% of that value of the oil that we do find in South Africa's territorial waters. Now, I don't know about you, but that to me is not a deal. That to me doesn't make sense. We should be at least on a 50-50 or a 60-40 split, but it's nothing like that. We are getting 10% of our own value of oil if we find it. The foreign companies continue to come to South Africa, extract our value, take it away, and make massive amounts of profits, and we see but a drop of it here as South African citizens. So when now you look at this spreadsheet on the screen, you should start to form a different picture and understand how significant these currency exchanges are. It affects our economy in a very direct, real way. And there's no getting away from it. You can't ignore it. You can't avoid it. It is every day this is going on. And it's costing us way too much. We should be working smarter. We should be thinking differently. Hopefully that will happen, but I'm not, I've seen things, so I'm not pessimistic, but I'm not too optimistic either. Okay, so I'm stepping off this now. And are there any questions from your side around anything that I've mentioned so far? I'm not coming back to this. Please make sure that you bookmark this session and the other sessions, that you revisit this so that you have some record of what I explained to you, because you'll be asked to come up with explanations about this very topic and all the topics, in fact, that I've been covering up to this point. In the next first class test, these things that I've been speaking about will pop up in there. So make it count for you, please. All right. Now we move to the list of economic concepts. And here, ladies and gentlemen, exactly for the class test, the purposes of the class test again. So just for noting, we've just looked at Brent crude on screen. Top 5 oil producing countries, top 2 oil producing countries in Africa, and then South Africa's oil. Where is it? We don't have. Now back to general. Gross domestic product. So here I want to help you, but you got to help me. So what is your definition of GDP? And or also then GNP, what does it mean? Okay, so quickly, you with your fast fingers, share with me what did you find? What is the meaning of GDP? Let's just kick that one off now. It's important that I understand how you see it so that we can quickly talk about that and reach some kind of consensus on that. So in the comment section, let me just quickly see what is your definition or understanding of gross domestic product, GDP. In my next life, I want to type as fast as you guys can. It's amazing. Okay, so national products, yeah, measure of national income and output for countries, total value of final goods and services, yes. Right, Lulama, I like yours in particular. Not that I dislike the others, I just like yours more so. Why? Because most of the answers that you see in the comment section now related to GDP is not incorrect, it's just incomplete. If I can characterize it like that. What I'm saying is, Ms. Lando, and let me see if there's anyone else. It's as if it's no, so far it seems Ms. Lando, you are the closest to this, because here's what you must know. In our country, on a daily basis, right, day to day, week to week, month to month, we produce products of all sorts of things, right? All sorts of items, products and services. Every product that is produced has a value. It could be worth 2 rands, it could be worth 20 rands, it could be worth 2,000 rands, depending on what it is. The point is, what we're trying to establish with the gross domestic product is to figure out what kind of value are we creating within our economy on a daily, weekly, monthly basis. But we don't track it on a daily, weekly, monthly basis. We generally tend to track it over a quarterly and or a yearly basis. So for every 3 months or every 6 months or every year. All right. So we're trying to see how much value in products and services are being created within the economy. Now, you can imagine how technical and complex that calculation will be, because, like I said, there's some people creating a very basic product that's only worth a few rands, if a few cents even. But then there's other organizations that producing items that would cost in the hundreds of thousands, if not in the millions, for one unit. Now, you have to factor into the totality of the value in rand and cents terms of all the products and all the services that are produced within the border of South Africa. So if you look at your answers, what you shared, not necessarily wrong, it's just, can you see what I mean when I say it's incomplete? Because you can't say it's the value of the, and just call it the value. Value, what value? It is the actual rand cents value, right? It's quantified as rand cents value in the economy. So what? Now we know what the GDP was for 2022. So what? Great, so now we know. The point of it is precisely to measure and compare GDP numbers on an annualized basis so that we can see, or term basis, quarterly basis, as I was saying, but usually on an annualized basis to see if we keep on producing more or more and more products and services in rand cents value, or if it's the same amount or if it's actually less. Because the idea is to keep on producing more and more. Why do we produce more? Because population size is increasing. The demand for goods and services are increasing. So it's a very healthy state of being as an economy to have higher GDP rates. That means that we are economically more active. We are actually producing things that would then imply, and I'm very cautious with that, there's jobs. What do we know about South Africa's economy? We have huge unemployment. That's what we know. So what is the situation with the GDP at this point in time? Is it growing? Is it staying the same, or is it reducing? What is your research telling you? Are we, as a economy, is our GDP, our gross domestic product, on a year-to-year basis, is it increasing? Is it staying the same? They also call it stagnating. Or is it, in fact, decreasing, reducing? What is your research indicating as an economy? Has the number been going up? Is it staying the same, or is it going down? How is our economy doing, in other words? Based on where you found that definition of yours, was there any indication of what is going on in terms of the percentages? How much is our economy growing, if it is growing? Because like the revelation I made just earlier, so in the comment section, someone just share what your thoughts are. Like I just said about the oil price, there's things that you need to know about your own economy that you can't wait for someone else to come and tell you. This is going to be your economy. It's going to be, you're going to be the leaders. You need to understand how this thing works. And you need to really appreciate how much trouble we are in, for sure. So it's good and well that you can find a definition for GDP, but you must also appreciate what is the actual numbers involved here. All right. So Mr. Mavinyana, where's your friend, that friend Google of yours? How's he or she responding to your request here? Tell us about the GDP numbers. How much has the economy grown since 2022? Now, remember, 2022 is significant because that was supposed to be the end of COVID, right? End of COVID. So, end of COVID, because looking at the COVID numbers, GDP numbers all over the world just dropped to nothing, almost, not actually, but almost. And then after COVID, end of 2021 into 2022, the economic activity started picking up again. If you don't understand about GDP, you are basically lost as so-called future managers, as owners of your own businesses. We are in a dire situation. Our economy has been growing, right, over the last few decades. But the GDP rate has been going down since 2007, around about there. So from 1994 to 1999, you can say up to 2003, it was doing okayish, but from there to about 2007, it sort of went up and down and up and down. But from 2007, it wasn't doing great. So if you're sitting there wondering where are all the jobs, why are we having such a high rate of unemployment, then wonder no more, because quite frankly, this is frightening. We have a GDP, gross domestic product, growth rate of 0.6 to 0.7% in South Africa. That is less than 1% growth on an annual basis. So if you take the previous year's economic growth rate, GDP, and you compare it to the next year, you want to see that your economy is actually increasing in economic value, rand cents value. So we should be producing more every next year because there's more people around. Not in South Africa. We cannot even manage to get a consistent 1% growth rate. I don't know if you understand what I'm saying to you. I mean, the oil price revelation about we don't have our own oil, that's bad. This GDP situation is even worse, because now it tells you why we're not having more jobs. The economy is not growing fast enough. The economy grows at less than 1%, whilst at the same time, our birth rates in South Africa, so the population size is increasing on a year-to-year basis by between 4.5% and 7%. But yet the economy is only increasing by 1%. So now what? You're going to have more and more people, and the economy will not be able to absorb them. That is you included. That's why you sitting here, registered for this particular course, have a tremendous advantage over your counterparts who are not here, who did not get access to this course. That's why I'm very strict on people who sit here and waste time and opportunities, because you apparently don't appreciate how serious this is. This is an opportunity for you to make sure that there's some participation in the economy, either as a job seeker or as an entrepreneur. But either way, your country's economy is in trouble, growing at less than 1% on an annual basis, on a year-to-year basis. That is simply not good enough. It is not sustainable. Gross national product, GNP, your definition, I think if you found that definition for GDP, the GNP is now taking what is the numbers for GDP, so what we produce locally, and we talk about production offshore as well. In other words, outside the country borders. So how does that work? If you think about, and I've used them quite often as an example, but they are possibly the most dynamic company in South Africa in that sector, and that is Checkers and Shoprite. If you go outside of South Africa, you go visit our neighbors. I'm talking Botswana, Namibia, Angola, Congo, Zambia, Zimbabwe, Malawi, all the way up through Africa. You are bound to find a Shoprite, a Checkers, or a Boxer store somewhere there. And in some countries, you have many, many stores. So how does that work? It means that we have head office of Checkers, Shoprite is here, located in Brackenfell, here in the Western Cape, here in Cape Town. But they open stores in other countries. So if they run those stores there, and usually the managers and owners of those stores are locals people who live in those countries. But because the company is a South African registered company and they buy the rights to operate it, the profits are reflected in not only in that country, but it's also reflected as a GNP, a number here at head office in Brackenfell. So what it means is that we are expanding our operations from a South African company across to an international brand. It's no longer just a South African brand, it's an international brand. And the value that we create in a foreign country, that value is reflected in our financials here. So this is how we do it. Sasol does the same thing. Woolworths, a typical example. You'll find Woolworths in Australia operating there, has been operating there for a while. They're not doing too great there, by the way. But yeah, those are just some of the examples. There are many, many, many examples, right, of stores. If you go to Namibia today, it's almost like if someone was to blindfold you and take you across the border and take you to the capital city, Windhoek, and take off your blindfold and let you walk around there, you would think that you'd be in some town or city in South Africa. You'll recognize all the store names almost, with a few exceptions. So all the brands that we know here, you'll find there. And you'll even find brands there that are no longer even available here. The point is that business is no longer restricted just to one location. That's globalization. That's the third point on the screen. That's the consequence of globalization, which I'll talk about just now. So GDP is what we create, rand cents value we create inside our borders of South Africa. GNP is the value that we create inside the borders of South Africa, plus two things. One, these companies that operate, South African companies that operate in different other countries, the value that we extract there is reflected here in South Africa as part of the GNP. Plus, the second thing is exports. Whatever we sell from South Africa, we produce it here, but we don't produce it for South Africa only. We produce it for export. Whatever we export to another country, that value, what they buy from us, is also reflected as GNP. So, for example, we have a very healthy motor manufacturing trade in South Africa. We supply most right-hand drive vehicles. That means to say the steering wheel sits on the right-hand side of the car for markets that are similar to South Africa. Most vehicles in America are left-hand drive. That's the biggest market. And so we produce right-hand drive vehicles for BMW, Mercedes-Benz, Toyota, Ford, Nissan. The list goes on and on and on, right? And we export a lot of it, most of it, to countries where they also drive on the right-hand side or the left-hand side of the road, where the driver sits on the right side of the vehicle. So we are the primary exporter for most of those vehicles. So all BMW 3 Series cars, all Mercedes-Benz C-Class vehicles that are right-hand drive. So the driver sits on the right. If you sit in the front of the vehicle, the steering wheel is on the right-hand side. Most of that, 99% almost, comes from South Africa. You didn't know that. So, and we're very good at that. We get international awards and recognition constantly because it's good quality stuff. But that is deemed to be an example of GNP when we export that what we produce here in South Africa. So GDP, only local produced value, rand cents value of products and services. GNP, local produced value plus value produced offshore by South African companies, and exports. Not the same thing necessarily. Globalization has two very distinct meanings. You must know that and understand the distinction here. Globalization is when we, and again, I know that you're supposed to have done this. I'm just giving a brief synopsis because I'm spending too much time asking you for answers and it's not always forthcoming. Globalization is, and this is only happening because now we're online. When we're back in class, you'll see there's a different way of doing this. Globalization is essentially understood to be the world is an open market where we trade very freely our products and our services. We sell it to whoever wants to buy it. And we can buy things from other countries, imported whenever we wanted to. That was the idea behind globalization. And I say was, because that was what was going on before COVID. So free trade of goods and services across borders. Free, not as it doesn't cost anything, meaning there were very little restrictions. You could buy and sell, trade a product and service to most countries in the world. There are a few exceptions that will not trade directly with you, like North Korea, for example. They will not trade with anyone. They will trade with only certain countries, like China, which is their direct neighbor. But for the most part, all other countries could have fairly open trade amongst themselves. Then COVID happened and it shut down international borders. And once that happened, it obviously followed that if you shut down the borders, it means you're shutting down trade. So at the peak of COVID, the international trade just slowed down to next to nothing. It wasn't zero per se, but it was very, very little trade happening. Now, post-COVID, the world economy is struggling to regather that momentum that it had before COVID. Many economies were devastated because of COVID. They could not really survive it, especially economies that are dependent on only a certain range of products that they can trade, right? Like certain minerals or certain foodstuffs. If you can only sell one or two things to the market and the market shuts down, you're in serious trouble. South Africa was fortunate in a sense that we have a very diverse economy, meaning different types of products and or services that we can offer to the rest of the world. So even if the demand for certain things drop, the demand for certain other things will still remain fairly consistent. Like even during COVID, people still had to eat, right? So our production of fruits and vegetables for exports were still fairly going on. The problem was getting it to the market. It wasn't producing it, they wanted it, but the ships weren't so active because there were all sorts of backlogs, limitations on the movement of people and goods, and so on and so on. So the long story short is globalization is the idea that you can trade your goods and services across international borders. But in our class, and this, you've got to take some kind of a note to make it somewhere, separate notation. In BA3, this is the answer that most students write when a question comes up for globalization. What is globalization? I'm telling you that that may be true, but it's not the primary focus. There's a second focal point in globalization. So the one is international trade of goods and services. The second one is what I'm most interested in and what you must know. This is the answer that I'm looking for in a test or whether it's a class test or a formal paper. If this comes up, you need to look at the second aspect. And the second aspect can best be described as if you look, it's about almost 11:15 today. Now, if you go to Cape Town International Airport within the next hour and a half, maybe two, there will be a plane taking off. Doesn't matter what the destination is, it is an international flight. So if you go to the International Departures Lounge, that's where you go and wait for your flight to take off before you board the plane. So you wait in that general area, the Departures Lounge, and you were to observe, you can't see it from the outside now. They've changed it somewhat, so you can see some of it, but not all of it. But if you were to go to the Departures Lounge, what you will see now is there would be groups of individuals and some people who have no one else with them, and many of them will be quite happy, joking, laughing, smiling, taking selfies, because they probably going home. They've spent some time here in South Africa on holiday, enjoying our beautiful country, our very affordable prices for them. Now you understand if you look at the exchange rates. So they must think they're in paradise, because whatever our price is on the ticket for a product, divide that by 23 for a pound, 20 for a euro, and just almost about 19 for a dollar. I mean, imagine you come here with your dollars, your pounds, your euros. This is so cheap. We are struggling as consumers here, but for them, it's unbelievable. So they are happy. They're going home. They bought a lot of nice stuff, and they want to go share it with their people back home. But unfortunately, not everyone in that departures lounge is now happy, is excited to leave. Some people actually have tears because they're leaving knowing that they're not going to come back anytime soon, if at all. And those people leaving, and they are not happy to leave, are generally looking, if you look at them, if you go speak to them, you'll find out that most of them are South Africans with a whole bunch of suitcases. Where are they going with these suitcases? Are they going on holiday? Why are you crying if you're going on holiday? It should be a good thing, right? They're not going on holiday. They are immigrating. They're leaving South Africa with the intent of not returning, of relocating to another country with a career and a life that they're going to create there from new, from nothing. So why is this happening? Well, that's the point. This is, you just looked at GDP, GNP. I just explained to you that the economy is growing at less than 1%. So the opportunities for you to be able to, even if you graduated, if you are qualified, for you to do anything in line with your what you have studied is very limited. Now here's the kicker. This is why I'm very serious that when you look at globalization in class, that you consider this as your full answer, not that typical one-liner answer I get and then people don't understand why you didn't get your full marks for it. Globalization is not just trading across borders. Globalization is about the movement of competencies across borders. Competencies. Now, this is a word that you're going to hear me use all the time in class. Competencies. Look at the comment section. These are individuals in that departure lounge with their suitcases. Some, like I say, very, very upset because they're leaving behind family and friends and they're not going to see them anytime soon. Maybe a video call is the best they're going to be able to do. But in their physical being, they're not going to physically come back here anytime soon. Why are they leaving? And most importantly, who are these people leaving? Like, not your name and surname, like what kind of competencies are we talking about? Now, competencies is a collective, descriptive word that I use all the time. Give me an indication of what are competencies in your understanding. There are 5 distinct competencies that we all possess as humans. But now we're not talking in the general population sense. Here we're talking about competencies in relation to work, to your careers. So if we talk about your competence, what are we talking about? Give me an example. What competencies do you possess? Give me one example. In fact, if you can give me all 5, I'll be very impressed. But give me just one example of a competence that you have. Think about your CV. You are offering your competence to an employer, and your CV is your confirmation of your competence. So what am I saying? What is it that you offer on your CV that would be important to your next employer? Financially, knowledge and skills, absolutely fantastic, spot on. 2 of the 5. Ms. Adams, soft skills, yeah, leadership, I see where you're going, but not everyone has leadership, right, qualities necessarily, but everyone has knowledge, you have skills. What else? I'm looking for 3 more competencies, 3 more things that we possess. Experience, yes, that's a good one. So we have knowledge, skills, we have experience, and now we have 3, so there's 2 missing. What else do you have that you can offer to a future employer? Knowledge, skills, experience. And I'm not explaining this again. From now on, I'm just going to use the word competencies, and you must all know exactly what I'm talking about. Knowledge, skills, experience, ability. Yes, ability. There we go. So that's 4. Now we have 4 out of the potential 5. What is that missing one? The missing dimension. It starts with the letter P. P, potential. Thank you very much. That's your top 5. Top 5 elements that comprises the word competencies. Your competency consists of 5 elements: skill, knowledge, ability, experience, number 4. Number 5 is potential. So we all have it. You, as students who are now registered for the subject, are busy expanding your competencies. Can you see what I'm saying? You are improving on your competencies, generating more knowledge and skills, the ability to know and understand and to do things. You have acquired experience, even if it's only for 6 months. Some of you are busy finishing off on that 6-month duration of experience. But be that as it may, so you have skill, you have knowledge, you have ability, and you have experience. That last one is the potential one. Potential is a future possible ability or skill or knowledge that you will gather or be able to show, manifest in one way, shape, or the other. A typical example would be some of you are actually very good at singing. I don't have a singing voice. Well, I don't believe I do. But many people can actually sing very well, but they never get the opportunity to perform with background music and the right kind of acoustics and whatnot. So you hear yourself singing at home in the shower or wherever, and you know you don't think too much of it. But then someone else comes along and actually hears you sing. They hear you make the most beautiful music through your voice, and they make a big deal of it, and you think, oh no, they're just saying it. The point I'm making is this: even though you're not signed up to be a singer, you may be a fantastic singer, but you just never developed that competence any further. Growing up, you might have been told by teachers, parents, anyone in your religious community or whoever that you had contact with, that you have a lot of potential and that one day you're going to be whatever. That word potential is a mystery factor in all of our competencies because it's the one factor that it's very difficult to measure. It's not impossible, it's just difficult. It's easy to measure how much knowledge you have, the skills that you have, the ability you possess. It's easy to figure out how much experience you have. Those are all measurable, fairly easily measurable. But potential, the way you measure potential is through a system of what they call psychological testing. Okay, psychological testing, which is basically psychometric testing. Psychometric testing is a specific range of tests that are designed to uh, figure out, help people to understand what their capabilities are in future. Psychometric testing is a collective word. Look at the comment section. That's how we measure potential. So some of you have actually gone for aptitude tests. Some of you have done IQ tests. Né? If you've done anything like that, those are examples of psychometric tests. So a psychometric test is not one test. It's again a collective, a name for given to a range of tests like interest test, personality test, aptitude test, IQ test. You know, so this is how we measure someone's potential. So typically, an aptitude test is when you're not sure at school, you're not sure what must I go and study. You know, am I going to be a lawyer, a doctor, an engineer? What am I? You know, am I more technical? Am I more into people? Am I more with number orientated? What am I? So that kind of testing gives you that overall um, feedback to show you that you are more a people person, for example, that human resource management is a career option for you. Just as an example, right? So back to the departure lounge and people standing there leaving. So what we've established so far is globalization is about trade of goods and services, but it's also about the movement of competencies. Now, that's what I said, and I want you to make a note. Movement of competencies across borders. Now you know what competencies mean, right? Skill, knowledge, ability, experience, and potential. The 5 things. So I always use the word competencies in class to describe those 5 elements. But here's the kicker. Here's the real tragedy of the whole thing. And that is, those people with their suitcases who are unhappy, don't want to leave, who are they, right? Who are they? What kind of competencies do they have? Now, next thing, make a note. There are 5 levels of competency in our economy that you will find. 5 levels. Starting at the bottom is unskilled. Unskilled. 5 levels of competencies. So you know what the competencies are. There are 5 competencies, but then there's also 5 levels. And these levels you must know. So the 5 levels, starting at the bottom, unskilled. Level up from there is semi-skilled, S-E-M-I, semi-skilled. So unskilled, semi-skilled, number 2. Number 3, skilled individuals. So if you're unskilled, you can't read and write. If you're semi-skilled, you can maybe read or write, but very limited so. Can't really do mathematics. So very limited ability to read and write. Skilled would be you'll be able to read, write, and do a bit of mathematics as well to boot. That's a general test, how they classify this. So unskilled, semi-skilled, 2, 3, skilled. Number 4, highly skilled, right? So now you're talking about a diploma, advanced diploma, postgraduate diploma, a degree, an honors degree, right? Highly skilled, can also go up to masters, and in some respects even to the level of doctorate, depending on the industry. So unskilled, semi-skilled, skilled, number 3, number 4 is highly skilled, and number 5, the top echelon, the top level is expert level. Expert level. Now, expert level would be people with maximum qualification plus many years of experience. They are regarded as leaders in their respective fields of discipline where they work. They are regarded as experts indeed. Now, who do you think is in the departure lounge leaving? Would it be unskilled individuals standing there with their suitcases? Where are they going to go? Is it semi-skilled individuals who can do a bit of reading, maybe a bit of writing, but not much, if at all? Would it be skilled individuals who have the ability to read and write, but no real further qualification than that? So you have a matric at best. Or would it be highly skilled and expert levels? Because here's the thing. Why would they be leaving South Africa? I said earlier it's because there's not many opportunities for them to operate within their discipline of career, the choice that they have here. So what we're seeing is we're seeing engineers leaving. There are new South African engineers on huge demand elsewhere: Canada, USA, UK, Europe, Dubai, Australia, New Zealand. So we see engineers leaving. We see scientists. South Africa scientists are in major demand. Qualified nurses, qualified teachers, people with of experience, with qualifications and experience. Lawyers, we don't worry too much about the lawyers leaving, but lawyers, doctors, and so artisans, people with the skills to work with their hands to create things, mechanics, motor mechanics. So if you can get the picture of what I'm describing now, those individuals waiting in the departure lounge for their flight out of this country are not unskilled, are not semi-skilled. At best, or at worst rather, they would be skilled. But from skilled, highly skilled, and expert level, the top 3 levels, we're losing them. They get on planes and they leave this country, and we lose their competence. Now, so what? You might think, but there's so many thousands of people walking around with qualifications, and they don't get a job. So maybe it's a great thing that these individuals get on planes and fly out of here so that those who are looking for work can then maybe take their places. In reality, it doesn't work like that, because a qualified doctor, a qualified engineer, a qualified scientist, it takes a long time for you to be fully qualified. You can't study to be a lawyer, finish, get your degree, and now you walk off the stage with your degree in hand, and the next day you call yourself advocate, so whatever. No, you got to do your articles. So you got to go through a period of practical training, whereby you'll be assessed whether you're going to be suitable or not to perform the duties of an attorney or an advocate, for example. Doctors, the same thing. Just because you graduated doesn't mean to say that you are now allowed to open your own practice and just, see patients and do your own thing. No, you've got to go through a period of showing that you are able to do so. So you're working under very specific conditions where you are being observed and evaluated. And so we are losing this top flight of competence in South Africa, the same competence we desperately need to help the economy grow. They are getting on planes and flying out of here. We are actively giving away that competence. We're not even selling that competence. We're giving it away. And the point here, in conclusion to that, is the cost of studies for those three categories, in particular the top two, is tremendous. The state will subsidize your studies, and I'm talking about you in this session and everyone else who is enrolled at a university or a college somewhere that is accredited by the South African government, right? SACO accredited. You are subsidized. The taxpayer is paying a portion of your total actual costs. Forget about NSFAS. The point is that you don't pay your full tuition amount that you should be paying, because the taxpayer is paying at least a portion of it. Now, those individuals, like young doctors, young qualified engineers and scientists and so on, they've just gone through the academic program. It costs the state a huge amount of money in terms of subsidies, and then you see them get on planes because they can't find jobs here to do their prac in. So they find jobs in Dubai, in Switzerland, in Canada, in London, or wherever they're going to go, New York, and they go off. And we just spend a lot of money on these guys' training and qualifications, and they leave and they don't owe us a cent. So we train highly skilled individuals to allow them to get on planes and just fly out of here. That makes no business sense at all. From an economic standpoint, even less so. So globalization has two distinct meanings. It is not just about trade across borders, as most people tend to want to think. It is trade across borders, yes, but it is more importantly for us, it's the concern that we are giving our competencies away to the rest of the world, the same competencies that we need to drive economic growth. There's a huge shortage of engineers in all the local municipalities in South Africa. Very few municipalities have their own engineers stationed there, so can help oversee the projects for, service delivery, roads, sewage system, water supply, electricity grids, building of community centers, building of schools. So small municipalities don't have that because it costs too much, and they don't really attract that high level qualification, because they don't want to live there. They want to work in the cities where there's more opportunities, more money being paid. So in effect, these engineers get on planes and go work for other countries. It's a bad, terrible state of being. So far, it's not been good news today. We don't have oil, we're price takers. We grow our economy less than 1%. It's ridiculous. Where's your jobs going to come from? Especially if you consider the birth rate is 4 or 5 times, 6 times what our GDP rate is. That's not a good situation to be in. It is actually scary. Then on top of that, we have globalization still happening now post COVID, where individuals are getting on planes and flying out of this country, and they are competent individuals, skilled, highly skilled, and expert level, leaving the country. You should be in a position to explain this, what I'm explaining to you now, exactly like this, but in full sentences. Trade balance, number 4 on that list, trade balance, is the question is simple. As an economy, is South Africa more likely to export goods or more likely to import goods from other countries? Do we sell more things to other countries, or do we tend to buy more things from other countries? What is your take? Are we importing more or are we exporting more? Which one of the two, in your view, based on what you think? This is just an opinion at this point because you don't have the data, I think. But if you've done any kind of reading, the answer is fairly simple. What is the situation in your view? Are we importing more or are we exporting more? Where's those fast fingers of yours? So trade balance is trying to understand what is going on. Are we selling as much as we're buying? Are we exporting the same amount as what we are importing? That is in full balance. Or are we exporting more and importing less? What is the situation with South Africa at this point? Come, I want to conclude session now. Where are you now? And this is just an opinion, so let me hear it. I'm still talking about your own country. There's absolutely no question. If you go and do even a little bit of research, the answer is unequivocal. We tend to be over-reliant. I already actually said this in session before. We tend to over-import and under-export. So we are more likely to buy things from other countries than what we are selling to other countries. That doesn't make sense. I mean, think about what I'm saying to you. If you keep on buying stuff from overseas, it means that what you are importing from overseas, you're not making here. And if you're not making it here, you're not creating jobs here to make it. So if you import, and this is what most people don't understand, if you import goods from other countries, products from other countries, you're not only importing that product and pay them at their exchange rate, so take the rand and turn it into whatever their currency is and pay them for this, what you've bought from them. You also giving them the jobs to create that product which we are now importing. So they not only get the money out of us for selling us the goods, they also get the jobs. So we're sitting here in South Africa scratching our heads thinking, oh, why do we have such high unemployment rate? Because we keep on importing things that we really should be making ourselves. The question is, why is that so? Because the politicians get involved and they start entering into agreements with other countries and companies, and they only enter into agreements if there's something in it for them. They don't really care about us. The only time they're really interested in us as the population is when they want our votes. After that, they go sit in meetings that we only find out about much later when it's too late. And they sign agreements which on paper seems fantastic, but we rarely ever get the full benefit of anything. But this notion that we can't produce most of the things that we tend to want to import is just nonsensical. We need to think differently. You are the generation to change that. So for our next session, that will be Tuesday. On recording now, so there's no I didn't know story. Tuesday session, very important. We start off as I normally do, talking about the exchange rates and the oil price and the reasons for the change. Then we proceed to go to general, because I want to conclude this, a big session. We're going to talk about interest rates, right? Interest rates, repo rate, and prime lending rate. You must know the meaning of what is repo rate, what is prime lending rate, the meaning, that's the definitions if you like. Plus, what is the current percentages? How many percentage points would be repo rate and how many would be prime lending rate? You've got to understand interest rates like that. Then, 6 factors of production. Remember now, when we look at the 6 M's, the 6 factors of production, you must go and find out what those 6 factors of production are really all about. Okay? So, there are 6 factors of production, which simply means these things are necessary. It's critical. You cannot start a business, run a business, or expand, grow your business without these 6 factors all being present. That's why they are important. You must go and find out the 6 factors of production. And we're going to share it in class. You're going to understand what they are. That will lead to the explanation of inflation, PPI, CPI, what that means. So you've got to find out about what is PPI, what is CPI. So I'm going to connect those dots. I already spoke about inflation targeting today. I said inflation targets between 3 and 6%. Okay, so Tuesday, it sounds like it's not much, but it's a huge discussion. Interest rates, factors of production, the 6 M's, and inflation, and how it all fits together. Then we're going to conclude the discussion around matters economic by looking at the reasons for why our economy is struggling, because then you should have a better understanding. By then, you should have a better understanding. And finally, how to turn it around, how to improve economic growth. I need to finish that with you ASAP. You are behind schedule. So do the necessary from your side. Remember that our Tuesday session doesn't start as per timetable at 2 o'clock, but in fact it will start at 3 o'clock, 2:45, 3 o'clock. I will confirm again next week. Plus, I'm not sure, has anyone volunteered at least, or have you decided on nominating someone as a class rep as yet? Any news on that front? Do you have a class rep? Take it that's a no. All right. Not good, but yeah, it's your choices. You have to live with it. Okay, so that's what you need to do. The recording is definitive. There's none of this I didn't know story. Please be ready, be in attendance, but most important, be prepared. All right. Have a good week, what's left of it, and weekend. Do your pre-reading and post-reading of what we discussed, your own notes, and then revisit the recordings. That's how you're going to get to an 80% plus for BA3. Anything else is a gamble. All the best, take care, and enjoy your day further. Goodbye.